Lawrence Park Asset Management is a company I co-founded in 2011 after a 20-year career trading fixed income in Toronto, New York, and London. I created Lawrence Park because I felt we were entering an era where most bond strategies could no longer be relied upon to deliver the type of meaningful, consistent income that Canadian investors needed in order to meet their retirement goals. The core philosophy behind Lawrence Park is to create alternative fixed income solutions that can deliver attractive returns with an emphasis on capital preservation and low volatility. We believe we can offer our clients valuable diversification from traditional bond strategies and help to reduce portfolio volatility while maintaining core income through the economic cycle. Lawrence Park currently offers 3 core products for Canadian investors. Our flagship fund, the Lawrence Park Credit Strategies Fund, launched in 2012 and is intended for accredited high net worth investors looking for moderate income and consistent capital growth with low volatility. It focuses on the investment-grade bond market with an active management approach to generate incremental alpha by exploiting pricing inefficiencies prevalent in global corporate bond markets. In 2015, we launched our second strategy, the Lawrence Park Enhanced Preferred Fund, which has consistently outperformed the Canadian Preferred Index with lower downside risk through careful security selection and the judicious use of option-based hedging overlays. And finally, in 2018, we partnered with CI Investments to launch the CI Lawrence Park Alternative Investment Grade Credit Fund, a liquid alternative fund which brings our unique approach to corporate bond investing to a broader Canadian audience. The investing strategies and techniques that we use at Lawrence Park are ones that my partners and I have honed over a 30-year career in fixed income, trading for major Canadian banks and international asset managers. We focus on liquid, investment-grade corporate bonds, and we use modern investing techniques to isolate credit spreads as the key driver of returns. We construct a diversified, international portfolio of high-quality bonds that can deliver consistent returns with minimal volatility. We hedge out what we see as the primary sources of volatility, namely interest rates and currencies. And then we actively trade the portfolio to generate incremental returns. We believe that the opportunity for alpha generation in fixed income comes not from name selection, but from security selection, constantly switching between the dozens or even hundreds of bonds issued by individual companies, which have different characteristics, different maturities, different currencies, different underlying collateral, different coupon types, even different put or call features. New bonds are being issued every day, and there's no centralized exchange. They all trade over the counter. Different dealers will have different axes at any given time, and we believe there are opportunities to switch between all these different securities for incremental profit. Our edge comes from our experience using alternative techniques to exploit pockets of value that the large index-based managers might otherwise ignore, and our trading relationships with dozens of bond desks in Canada and around the world. Our experience allows us to react quickly when a trade opportunity, such as a cheap offer or a new issue, presents itself, and our active process-based approach captures small incremental returns regardless of market conditions, which leads to meaningful alpha over the course of a given year. Most importantly, by maintaining ultra-low sensitivity to interest rates, we offer true diversification to the majority of fixed income out there. We aim to deliver meaningful, consistent returns with greater resiliency to adverse market conditions. We view this as an all-weather strategy that you will likely be glad you own when markets inevitably fall. While market conditions continuously change, what investors expect from their bond portfolios shouldn't have to. Investors still look to fixed income for consistency, low volatility, and capital preservation, which we believe is getting harder and harder to achieve with traditional strategies without taking undue risk. At Lawrence Park, we design our portfolios to deliver these conservative income values while hedging against the downside risks currently present in fixed income.